Andrew, there's lots of private equity money out there shopping for deals. Why do you like the mid-market space in particular?
Well, at Capital Dynamics, we focus exclusively on the middle market because we feel like that's where there's the best opportunities to buy companies that are needing professionalization, where we can go in with a partner who specializes in bringing world-class talent to smaller companies and making them into world-class companies themselves.
And where do you see the best places for alpha generation right now? What's the best way to beat the market?
Well, I would say investing in good companies with bad balance sheets. So we've seen a lot of opportunities like that going back 2 years to when interest rates first spiked, and companies that still have strong fundamentals found themselves with too much debt on their balance sheets, and they had difficulty servicing that debt. That put them in a situation of either having to sell themselves or take on fresh capital when they were in a vulnerable position. Now, some of those companies have managed to hang on for these past couple of years, but now with the latest tumult in the markets, if they have pressure on their supply chains or whatever the case may be, that may be the straw that breaks the camel's back. And we think we'll have more opportunities like that going forward to buy good companies from distressed sellers at attractive valuations.
Can you define a little bit more the size of the mid-market from where to where? Because one of the things that you do over at Capital Dynamics very well is you look for niche businesses. So how small is a niche business, for example?
So generally, those are companies that are less than $1 billion in enterprise value. And what that generally means is that we're partnering with smaller private equity firms rather than the big brand name firms that people out there may have heard of. And then so we invest in those smaller niche type businesses, and then we seek to grow them. So we'll employ value creation initiatives to help grow them organically, as well as through acquisition. And once we get them past key levels of earning thresholds, we can sell them to larger private equity firms and realize a multiple arbitrage.
How competitive is the market right now in terms of valuation? Because you do have some very big players, and they're shopping in the middle market as well.
Well, it's interesting. Right now, the markets, there's some chaos in the markets that you may have noticed out there, and that's kind of put some marbles into the M&A machine, and many processes have ground to a halt at the moment. But we expect that to be somewhat temporary, and over the next few months that the market will find an equilibrium. And when it does, there's likely to be a flight to quality. With everybody worried about a recession being on the horizon, or maybe already it's here, what we expect to see is people chasing companies that are thought to be somewhat recession resistant, defensive industries like healthcare. What happens when we see that phenomenon is that valuations tend to get driven up in a space like that. And so you still need to be pretty careful making investments in what are thought to be safe sectors in an environment like this.
And then finally, can you talk a little bit more about the added value of an asset that's not marked to market on a daily basis, especially during a volatile market? For a long time, private market assets were held by endowments because they were supposed to be held for the long term. Now it must be kind of a relief almost for you and managers like yourself in a portfolio where you're not checking the ticker every day.
Well, absolutely. I mean, we have the benefit of long-term patient capital, and so there's no need to worry about next quarter's earnings call. We can invest in companies where we can take on initiatives that are long-term in nature, make investments that are going to result in reduced earnings during the first year or two of ownership, where we're building up the sales organization or professionalizing that business with a longer-term impact that's going to pay off, where we don't have to worry about answering to the equity analysts every quarter.
All right, well, thanks a lot for coming on and talking about it.
Great, my pleasure.